Hi, I'm Anup, and I welcome you all to Blue Saffron, the podcast program of corporateshitak.com, sponsored by Jani Plastics. And you're about to receive knowledge on Indian and Australian GST, goods and service tax. Yeah, you got it right, mate. Let's get started, shall we? Exports from Australia. Exports of goods and services from Australia are normally GST free. A GST registered person in Australia need not include the GST in the price of exports. And not only that, the supplier can definitely claim GST credits that were included in the price of purchases used to make the exported goods and services. So let's say if there is any exporter in Australia making some purchases of items used to make the goods meant for exporting, need not pay the GST on that. The onus is on the supplier to export goods within 60 days of either receiving complete payment from the customer overseas or having issued invoice, whichever the first. However, supplier can always contact Australian Taxation Office ADI for extension. Exports other than goods may include things of sale other than goods or real property for consumption outside Australia, such as professional services, various rights, and financial supplies can be exported. Let's talk about various scenarios. Scenario 1, selling outside Australia. Now, let's imagine there is an Australian author working for a firm within Australia. He's writing a chapter in Australia for publishing it in one of the books in India. Now, this is an export, hence it will be GST free. Another scenario is where services are provided to foreigners within Australia. If there is an Australian institute providing education to overseas students within Australia, it is not GST free, simply because the place of supply is not outside Australia. Third scenario is where John is not GST registered person selling his goods through his website online with turnover about $50,000. Now we all know that the threshold for GST registration is $75,000. So if the business person crosses the threshold of turnover of his business of $75,000, he has to register for GST compulsorily. Let's say suddenly his foreign land sale rises by $30,000, resulting in turnover of 80,000 Australian dollars, which crosses the threshold limit obviously. Now John has to register for GST and charge GST to his local Australian customers despite the sale being exported and GST free. Another scenario is non-resident GST registered business. Now, for a non-resident business which is GST registered in Australia, is not entitled to claim the GST credits on certain purchases that are non-deductible for income tax purposes, such as purchases of private nature, entertainment provided to employees, entertainment expenses. So my dear listeners, I hope you enjoyed the audio. I also hope there was some takeaway for you. Signing off now. We'll come up with more interesting episodes. Till then, take good care of yourselves. Keep liking your one and only Blue Saffron. Cheers. Bye-bye.